Anson took over as Goals chief executive last month. Shares in Goals soccer centers dropped sharply after the 5A-side football pitch operator said the adverse weather in March led to a £500,000 fall in sales in the first 18 weeks of the year. East Kilbride-based Goals is the latest in a long line of businesses to lament the impact the extreme conditions brought by the beast from the east, which hampered demand for football matches. The company, which has 49 centers including 3 in California, said like-for-like sales for the period dropped by 1.9%, sending shares down nearly 6% and wiping around £4 million from its stock market worth. Stripping out the impact of the weather, Goals said like-for-like sales were up 2.3% compared with the first 18 weeks of 2017. It flagged its continuing investment in upgrading its pitches, confirming that it would spend £3 million to refurbish 90 playing surfaces at 18 clubs which have 4 or less upgraded arenas over the course of the summer. The investment is designed to reverse declining sales at clubhouses at older arenas, with Goals noting that 73% of its estate will have been upgraded by the time this summer's program is completed. The program will reduce the average pitch age in those arenas to 3.2 years. Goals reported in March that the performance of its older sites had weighed on its results for 2017. Its profits dipped 19% to £6.2 million. Last year the company formed a joint venture with City Football Group, owner of English Premier League Manchester City, which has invested $16 million to drive the rollout of Goals across the Atlantic. The firm confirmed yesterday that it has started work in its 4th U.S. club, at Covina in Los Angeles, earlier this week. That followed the opening of its 3rd in LA, at Rancho Cucamonga, in January. Goals said negotiations over further sites to develop continue and described the pipeline of opportunities as strong. It has previously stated that it hopes that 7 centers will be up and running in the U.S. by the end 2019, amid plans to open 2 new outlets per year across the Atlantic. Analysts at broker Peel Hunt said in a note, the key to the investment story is the sustainability of LFL, like-for-like, sales growth in the first invested sites, and, fortunately, LFL sales are remaining strong in the invested pitches. As a result, the company should now enter a 3-year period of positive LFL sales, during which earnings should recover and gearing should have. To reflect this, we are raising our target price to 100p. Chairman Michael Bolingbroke, a one-time chief executive of Inter Milan, said, 2017 was an important year for rebuilding and refocusing the company, following the strategy put in place in mid-2016. Our arena modernization program is well advanced with 53% of our estate now upgraded, reducing our average pitch age from 7 years before the upgrade works commenced to a current average age of 4.1 years, and we continue to develop our business in the U.S. Goals is now led by Anson, a former Manchester United and Walt Disney Company executive who joined last month. Replaced Mark Jones, who is now chief executive of Carluccio's. Shares in Goals closed down 5.25p, or 5.92%, at 83.5p.